I'm going to start recording, and I would like to thank Anna and Tim for joining us this evening in this Cratis talk about R&D, games, TV, and film tax reliefs, topics which are quite important in the current climate as everybody's revenue seems to be going relatively down the drain. This is part of the Cratis program that Game Anglia has been doing for a few months now. It's a program that's initially designed to support people in the tech and creative industries in Colchester, but we have taken everything online, so I'm guessing that quite a few of the attendees tonight are not necessarily from Colchester. So thanks to the Creative Colchester group and Colchester Council for giving us this opportunity. Tim, I think tonight we're going to start with R&D tax relief. So I'll be loading up some slides and then you can go through them if that's okay.
Sure, sounds good.
Cool. I might mute myself from time to time.
No
just
worries.
as a warning, if you see my mouth, my mouth move, but you can't hear me, let me know and I'll unmute myself.
Sure, we'll do.
Okay. Can everybody see this right now? The screen?
Mm-hmm. Yeah.
Okay. Right.
So I think we just need
back to slide 1.
Yeah, I got a slide before. Perfect. Well, hello everyone. Well, let me start again. Hello everyone. So my name is Tim Davies. I'm a senior associate at Sheridan's, specialising in working with games and games companies, in particular helping games companies get finance for making their games. And I'm presenting with Anna Mansi, who's head of certification at the BFI. So I'm going to just kind of like kick us off today, talking about R&D tax relief. Talk a little bit at the end about the basics of setting up a company, because you'll see why that's important shortly for R&D and VGTR, and touch on a little bit about why setting up a company, if you haven't done one, is a good idea for claiming the relief. So on that, just without any further ado, Chris, can I have the next slide? Perfect. So R&D, if I don't know anyone else in the audience watching, if you're from a games company or a tech startup or anything like that, but R&D has been around for quite a long time. It first came in 2000, so way ahead of the creative tax reliefs for games, film, and the like. And it's really similar to the video games tax relief and other creative relief schemes, in that the benefit to companies are that if you're making a loss, you can get a tax credit, which is a cash payment from HMRC. But if you're making a profit, then you can reduce your corporation tax bill so you pay less tax. Unlike creative tax relief, there's no test or points-based requirement around Britishness, but there are other criteria that you need to satisfy, and we'll come on to those in a bit. It can be claimed on unsuccessful projects, and you can claim for subcontractor spend, which is again similar to the creative tax rules. And there are just like a point, and just a note for anyone kind of watching. There are sort of two schemes. If you're reading around this online, you might see that there's mention of an SME scheme, so small to medium enterprises, and also part of the scheme that's available for large companies. For the purpose of this talk, I'm just going to talk about the SME part of the scheme, because that's purely what's going to be most applicable for most companies. So next slide, please, Chris. So in terms of who can claim, so no, you've got one. Yeah, there we go, Chris. Thank you. Perfect. So in terms of who can claim R&D, must be a UK company. Again, that's one of the same requirements for relief, for the creative tax relief as well. But you must also carry out an eligible R&D activity, and we'll come on in a very shortly as to what that is. There can't be any double dipping, so there might be, if you're making a game, for example, there might be an overlap between the spend that you may do on making the game and also R&D expenditure. But you can't claim both reliefs for both sets of spend. You can separate the spend out and claim it for R&D or claim it for VGTR, but you can't claim twice in respect of the same spend. An R&D expenditure must also have been incurred in the current or previous accounting period, Again, very similar to a creative scheme. So if you have a historic claim, you can't look any further back than 2 accounting years.
Here I have a question about the double dipping, Tim,
Of
just to
course.
clarify. So say you're working on a game that's I don't know, an RPG, but you want to make it really international, and you want to separately develop a tool for it to help localization, and that's something that could be risky for your enterprise because if the game doesn't work, you might not have another project to use it on. So in that case, you would be able to claim VGTR for the game itself, except the tool, and R&D for the tool if the tool would be deemed as worthy by the HMRC.
Yeah, that would certainly be possible. And what would happen in that particular case? It would just be a matter of apportioning the spend between what's been spent on game development, so what's been spent on the RPG side, and then what's been spent on the R&D side in terms of making the tool. So there's a few different ways you can do this, actually, and we'll talk a bit about the end about different corporate tax structures and maybe why it's worth having a special purpose vehicle. And I can come on to that in a bit more detail. But otherwise, if you don't want to do that, it is possible for one company to split the trades. So you can have one aspect of the company is focusing on research and development activity, so creating a tool in that case, and then the other part of the company is focusing on the game development stuff. So it's perfectly possible to do that. So if I can get the next slide. So research and development activity. Obviously, research and development as a general phrase is pretty broad, and it is when HMRC are looking at what money is spent on in terms of R&D, it's activities as I've written there, undertaken with the prospect of gaining new scientific or technical knowledge and understanding. And it's the science and technology bit that's actually the most interesting and most important if you're a games or a tech business, because games by its nature is software and hardware development, and that is game development, and you fall nicely into the technology brackets for that. So when it comes to the specific activities, there are criteria that need to be met in order to qualify as R&D. So that's money that has to be spent on trying to look for an advance in science and technology, and in particular it has to look at overcoming an uncertainty that might have existed before. So if you're making a console game, that might be a little bit harder, but if you're making your own game engine or middleware or a localization tool like Chris mentioned, and you're doing something a little bit different to solve a problem, then you might have something there that is worth claiming R&D on. If you're making something for VR, AR, or any sort of like mixed reality, you're probably going to have a much stronger claim because there's a lot more uncertainties in those kind of sectors and those areas, whereby it's going to be easy to sort of overcome. So making eye tracking better for VR headsets, for example, to reduce motion sickness. That's something that a lot of people will be looking at claiming on. And as part of that criteria, try to overcome that uncertainty. You don't have to succeed, as I mentioned. You could, if you are unsuccessful, you can still try and claim R&D on the unsuccessful project. But you have to show evidence that you've at least tried to overcome that uncertainty. And also, it has to be something that couldn't be easily worked out by someone in the field. And it has to be something, again, your research and development activity isn't something that is just going to be benefit to your company. It has to benefit the whole sector. So it's a higher bar than VGTR, for example, and it's more specific. What you're spending that money on is going to be a lot more specific. So that's when I say it's more abstract than the VGTR points-based test. It is far more abstract, whereas for I'm using VGTR as an example because I always go back to games because that's what I know. R&D itself is obviously far more abstract than that, whereas for VGTR and developing a game, the criteria is anything that's spent on designing, producing and testing that game, which could be anything. But for research and development, you are purely limited to the spend that was intentionally done on gaining new scientific or technical knowledge. And I've also put there it's subjective, because when you submit your claim to HMRC, which you would do by your tax return, you're also a bit at the mercy of the person at the other end at HMRC who's looking at your application, because they might have seen other things, other applicants doing stuff that's similar to yours, or it goes even further than yours in your application, that might mean that you can't qualify or you won't be able to get relief on all of the spend that you want. But in any event, it's still worth applying and going through the process. The next slide, please, Chris. So I've just got a little list about the eligible expenditure here. So it can cover anything that goes towards that R&D activities, like I was saying. So that can be staff costs, so people working directly on developing that localization tool that Chris mentioned. Software license fees, or fees paid for middleware, anything else that can help making or working towards your R&D project. Utility costs, so heat, light, water, those kind of things, you'll be able to get an apportionment for those as expenditure. And I've also put consumable costs in here, and that's materials of equipment with a short or useful life. That also does technically covers the software angle. But if you're thinking about R&D as like scientists working in a lab, this would be stuff like test tubes and petri dishes, stuff that you might use once and then you can't use again and have to throw away. So talking about the staff costs, so staff working on R&D activities, you might not have everyone working on R&D in your company. And this goes back to what we were talking about before and the question that Chris raised, in that you can apportion the costs between your staff. So if you have 2 programmers working on this localization tool out of a total of 5 staff, then you would obviously just only be able to apportion the costs of the 2 staff that are working on the particular project. And if the other 3 members of staff were then working on game development stuff, so animation, gameplay programming, and artwork, then you might then look at claiming the VGTR for that spend. But in that sense, you've split the cost between R&D spend and VGTR spend. So the rate of relief, I talked about if a company is profit making, then it reduces corporation tax, and it does this quite well. And it's the rate of relief, I think, we'll come on and see about VGTR is slightly higher than games tax relief, but because you're kind of picking it out of a smaller bucket, really. There's obviously fewer costs that can be eligible for R&D activity, but effectively it allows you to deduct an additional 130% of your qualifying costs from your annual profit. So you'll see from the next slide, I've done a little worked example about how this looks. So if you have R&D spend of 100,000, then effectively what happens is that 130% acts as an enhancement. So it enhances your spend by 30%, and therefore when you come to, if you multiply that by the corporation tax rate, which is currently 19%, you get a figure of £24,700. So that is the amount that would then be taken off your profit total. And it shows that the benefit of, if you're a profit-making company, the benefit that you'll get from using the R&D relief scheme is nearly 25%. So it's pretty decent. So it's quite a sizable sum to come off your taxes. So the next one is looking at loss making, and similarly to tax credit, if you're making a loss, the relief is usually higher. And that's because if you're loss making, you also get to benefit from an additional 100% for the general rules of deducting revenue expenditure. So you get an enhanced expenditure of 230%. So obviously you can see here, if the R&D spend is 100K, you can obviously times that by the enhancement rate of 130, as we saw before, plus the 100, you get to add on effectively your 100K again. So 230% of 100K becomes 230K. But then there's a separate surrender rate here, because obviously the benefit is obviously greater if you're making a loss. So rather than it being multiplied against the corporation tax relief, it's times against the surrender rate of 14.5%. But that still comes to nearly £33,500. So the benefit if you're making a loss is obviously quite a bit more, at 33.3% if you're a loss-making company. and that effectively becomes a cash payment from HMRC rather than deduction of your corporation tax bill, because you obviously aren't paying any tax if you're loss making. So that is effectively, if you're a loss making company looking at R&D activity, or you are already doing R&D activity, then that's money that the government is effectively just going to pay you just by the fact that you've already spent that money.
How do you define the difference between profit-making and loss-making activities?
Well, that's not necessarily the activity. So if your company is either going to be making a profit, so its income is greater than its expenditure, or it's making a loss, in which case it's the reverse. So it's not about the activity; it's looking at the company as a whole.
Okay, cool.
So next slide, please. Thank you very much. So kind of like just skimmed over kind of the benefits of the scheme, but just wanted to touch on about how to maximise the relief. And actually this applies for both the video games tax relief, as well, as we're going to see when Anna speaks next. But I mentioned earlier about having a special purpose vehicle, that's the SPV bit on this slide, in how you can maximise the relief. And effectively it means you already need a company to qualify for the relief anyway. But effectively, this means having an extra company that sits as a subsidiary, wholly owned by your current games tech company, whatever it is. And it is purely used for pushing the costs or expenditure through that company. The benefit being is that you can ring fence your costs. So as we've seen, if a company is loss making or isn't making a profit, the rate of relief is about 7 or 8% higher, and you get the cash payment from HMRC. So in order to qualify for that higher rate of relief, you can ring fence all your R&D expenditure in a separate company. And HMRC actually like this, and actually it's something that they encourage for R&D and VGTR activity. And you'll see a lot more games companies now who have their own special purpose vehicles for their game development activities, purely to ring fence the cost so that they can make the most of it. But for R&D companies as well, it also allows you to, we talked a bit earlier about how a company can apportion its trades. It can basically split itself in two effectively, to have an R&D trade and a games development trade. Well, if you have an SPV company, you don't need to do that. You don't need to be tricky with your books. You can keep all your R&D activity in one company and keep all your video game development company in another. So it keeps everything kind of like nice and clean. And actually, in terms of maximising the relief, if you are working on a particular tool, piece of middleware that would qualify for R&D, there's also the potential to maximise your games tax relief claim through licensing that down on arm's length terms from your top company to your SPV. And that can also become a bona fide cost that will qualify for video games tax relief. And I've got there the R&D tax credit is an asset, and that's the same for any of the creative tax relief as well. And especially in these uncertain times, if you're sitting on money that HMRC is going to pay you or will owe you once you've submitted an application, then there are lenders out there that will effectively cash flow that payment from HMRC, and they'll give you that money now, knowing that 8-9 months down the line, when HMRC processes that application, that they're going to get that money back. So it's something, if cash flow is tight and you are worried about maybe getting a traditional loan or something from a bank, it's a form of debt finance, so obviously that comes with its risks. It's a little bit too much detail to go in on this particular talk, but it's definitely an option out there if you can't wait for the tax credit but you are owed it from HMRC. And I just wanted to touch on about why you should set up your own company. So I just wanted to kind of like cap for the startups, or if there's people out there watching who haven't set up their own company and they're thinking about it. So I apologise if you've already done that. If you've already done it, you're ahead of the game, don't worry. But if you haven't, then why bother? Well, tax relief surely got to be one of the biggest reasons why, and you can only qualify for R&D and the creative tax relief if you're a UK company that's within the corporation tax structure. So that's a limited company, usually a company limited by shares. It also allows you to access other sources of funding, so grants from Creative England, all that kind of stuff, loans like we were talking about before, if you wanted to cash flow, there's credit and that kind of, and the credit for R&D and creative relief. But also if you want to get other access to other sources of funding, such as equity, so that's giving a part of your company away. You can't do it obviously without a company. And then the third point there is centralizing your IP. So if there's several of you working on a company or working on one particular project, one of the quirks of IP law is that the person who makes whatever they're working on in terms of copyright is the first owner of it. Obviously, there's exceptions to that rule if you're employed by someone, but if you're friends maybe fresh out of university, you don't have a company and you're working on a game, technically whatever those individuals are contributing to that project or to that game, they will own all the copyright and IP in that. And that can be an issue if there's falling outs or people decide to go their separate ways. So having a company allows you to centralize that, push all the IP into the company. If one person leaves for any reason, then it's not so much of a disaster. The company owns the IP. The people who remain in the company can keep that project going and can monetize that. The next slide, please, Chris. So just a quick glance through about how easy it is to set up your own company. It's really easy. You basically just need to go to Companies House, web filing. It costs £12 to set up your own limited company. And I've said it takes 24 to 72 hours. Pretty sure it's at the lower end of that at the minute. And it should be a company limited by shares, specifically for the R&D scheme and the creative tax relief scheme, and that's whenever you see a company with the LTD at the end, that's the limited. That's what the limited by shares means. And there has to be some rules that govern the company, but handily these are kind of all done for you. So the first tip is, if you are a new startup company, just use the model articles. If you want to get creative, if the company grows, you bring other shareholders on board, you bring investment on board, you might want to change them at a later stage, but it just isn't necessary at the early startup stage. And also, you can just use ordinary shares. So if there's several of you in the company, you might just all own one share that's worth £1 each, and that's all it has to be. It doesn't have to be anything more complicated than that. But if you want to be a little bit more creative, you can make your starting capital. Everyone owns 100 shares worth £1 each, and that might make it a little bit easier if you are bringing people on board or you do want to give equity away. It effectively saves you another step down the line of having to increase the capital of the company at a later date. But that's just a little quick spin through. So that's the end of my part. So I'll pass over to you, Anna. Oh, well, thanks very much. I thought this would come at the end, but
we have one question. Basically, asking about the costs that you mentioned here. Asking, are the costs on this slide the only ones that can be included in the claim for R&D?
No, so this was just this was just a kind of example of what can be included. You'll find that those consumable costs will include like a lot more kind of like line items, just more than I can fit on a slide. Effectively, if it's anything really that if you're carrying out R&D activity, it's anything that you reasonably think is a cost that has gone towards performing that activity. If it was something that, I'm not sure, like a particular bit of hardware that maybe wasn't essential for carrying out that activity, maybe you might be able to apportion it a bit, but you wouldn't be able to claim for the full amount. But no, by all means, that list is not exhaustive.
Okay. I think that's about it for this then. Thank you so much for the presentation, Tim. And I'll stop sharing my screen. And then, Anna, if you can start sharing yours to talk about video game tax relief.
I will. Okay. Just to let you know, if you can hear a lot of noise in the background, let me know and I'll put the headphones on. I'm just conscious I've got a train line next to me.
Yeah.
Right. I should.
And both of you are okay with us sharing the slides afterwards with the attendees?
Yeah, absolutely.
Yeah, that's fine.
Okay, can you see this?
Yeah.
Yep.
Right, okay. So first of all, thank you very much, Chris, and good to see you, Tim. So I head up the certification unit at the British Film Institute, and we are responsible, we're the first point of contact for games developers, television producers and film producers who want to access one of the creative sector tax reliefs. And we look after games tax relief, film tax relief, animation television, children's television, and high-end television. So this is quite normally when I've done presentations with Tim or Chris before, it's been focused solely on games, but this is going over all 5 sectors. But broadly, the principles are more or less the same. The rate of relief is also the same. We also do a little bit of work on the BFI diversity standards. So any film that is accessing lottery-funded funds has to qualify for the BFI diversity standards as well. So that's done in my team. And I'm also an ambassador for Autistica Play, which is the games art branch of Autistica. And I'm trustee for Games Aid and a patron for Safe in Our World. And Tim is also a trustee for Safe in Our World, which is the video games mental health charity. And I'd just say now more than, there's time more than ever, if you need support or help, you're struggling, do sort of have a look and follow them on Twitter and have a look at the website. Okay, so this isn't working. How do I make it move? I knew this would happen.
Click.
Oh yeah, well done. Okay, so what do we offer? As I said, I've already sort of covered this. UK government offers tax reliefs for those 5 sectors. There are also tax reliefs for museums, orchestras as well, but in terms of these tax relief, these ones you have to qualify as British to access them, and there's 2 ways you can do that. Either under our cultural test or as an official co-production, but that's only for film and television. So just to give you a little bit of background, the film tax relief was introduced in 2007, and on the back of that success, we then introduced a high-end television tax relief, an animation television tax relief in April 2013, as it says, and then video games 2014, and children's television tax relief in 2015. And I would say that the video games tax relief was due to come in 2013, but we had to sort of push the European Commission because it's a state aid to get that in. So we had to wait another year. But so we've had it in now for 6 years. We're getting a good response to people taking out. At the moment, we are, despite obviously being in lockdown and lots of film and television productions have stopped, we have an enormous amount of applications coming in. I think people are sort of waiting to gear up to go into production, as well as getting final applications through as well. So why do you need to qualify as British? Well, it's a requirement of each of the tax relief. You have to qualify as British. It's the gateway to accessing the tax relief. If you don't qualify under a cultural test or as an official co-production, then you won't be able to access the tax relief. You have to have the certificate from us, and that can be interim or final, which I'll touch on the end, to present to HMRC when you put in your claim. You can get loans against the tax relief, the different sectors, and this goes for games as well. There are financiers and companies and banks that will loan against tax relief in advance. So with an interim certificate, you can't claim the expenditure until you start incurring it, but you can claim it as production or development goes on. So if you are halfway through development or production, you've spent £500,000, but you've still got another 6 months worth of work to do, as long as you've got that interim certificate, you can claim on the previous 6 months work that you've done. Or, as I say, with a loan against tax relief, you can get the money up front if you can sort of assess how much you will need, how much your tax relief claim will be, and financiers, as I say, and banks will loan against it. They'll want you to have the interim certificate at that early stage though. And you can apply to us at any time. You can talk to us anytime. We're very much there to help you and guide you through cultural tests. For film and television, it can help for distribution and publishing deals, and for a number of different funds, it can help you. So in terms of BFI lottery funding for your film, Creative Europe, there is still funds open, although obviously with us exiting the EU, we will no longer be part of the Creative Europe scheme, but this fund is still open at the moment. There's regional funding and festivals as well. It can often be a requirement that you qualify as British to access those regional funds and festivals. So what's it worth? So it's worth up to 20% of your core expenditure. In this example, I've just realised this has come from the Games Tax Relief, but the rate of relief for all of the tax reliefs that we deal with is exactly the same. So it's 25% of 80% of the core expenditure. So it's capped at 80%. So if you have £1 million budget and it's all taking place in the UK, if it's film or television, or if it's all taking place in the UK or EEA for video games, then you can claim on £800,000 of that budget at a rate of 25%. So in the example below at the bottom, you can see I've not done 1 million, I've done 100,000. So if it was 1 million, you'd end up with 200,000 in tax relief. In this example, you can see you end up with up to 20,000, which is quite a chunk of your expenditure. And that's on all costs related to making the game or the television program or the film. So when Tim was talking earlier with the R&D tax relief, it's only on certain elements that you will be probably doing in the early stages. With the video games tax relief, film and television, it's about from the start of development through to completion. What we mean by core expenditure is any costs that you have to pay for to make the game or film or television program. And there are non-core would be things like potentially licensing fees, debugging costs if it's a game, marketing, HR. Well, yeah, it depends. Some things, again, like Tim was saying, costs of if you need to rent or paying for electricity bills, you can do apportionments as well. But there's the majority of your expenditure will be core expenditure. So it is quite a good chunk of money. And the government wants to encourage games developers, film producers, television producers, animation creators to make their content in the UK because it adds value to the economy. For every £1 spent on making a game or a program or a film, it returns back into the economy, it creates jobs. And we've done a big report evaluating all the tax rules and why they're so important to us. So the qualifying criteria, I'm going to go through each of the different sectors. You'll see there are similarities going across each of the different sectors. They are all modelled on the original film tax relief that, as I said, came in 2007. They're broadly similar. So for video games, you must have a UK video games development company that is set up before development begins. Now, it's okay if you've done a bit of prototyping, but before you go into full development, the company has to be set up then. So as Tim explained, you register your company's house, only costs £12. That company has to be the one that that is responsible for making the game from that start of development right through to completion of the game. And the reason why is because the company, that's the name that goes on, the company name is the one that goes on the certificate, and that's the company that HMRC will pay the money to. So if there's more than one company involved, there has to be one that's the lead company and the money is running through that cost. So it doesn't mean you can't outsource certain services or have service providers. For example, if you contract out some work for audio or post or music or any sort of elements, as long as that it's as a service provider. For video games, you have to spend at least 25% of your core expenditure in the UK or EEA. As I've mentioned briefly before, for the other tax reliefs, it's at a minimum of 10%. And I'll touch on that as we go through each one. And the game has to be intended for supply. So what we mean by that is that it has to be available for the public to purchase, or, I mean, it can be free to play, but it's not just something that you're doing to be sold sort of privately, like an educational tool, or just for, you know, friends to play in your bedroom. It's got to be available to the public. And it has to be certified as British through the cultural tests. So I'm going to go into the cultural tests in a moment. As I say, again, they're very broadly similar. It has to be a game. Now, this is an area which is quite interesting, because as we're becoming more interactive, we're seeing more films with interactive elements. We're seeing game developers use, or film producers using sort of game design tools like Unity to create different kind of experiences. So in terms of it, if it has, what is a game, it's about, are there interactive elements where you have to make choices? If it's not feasible, you know, you might have a VR experience then, but you can't actually, that it doesn't have that choice element, but you are getting that film produced, released at a festival, and someone has to pay and go see it. We could look at putting it through the film test instead. And Tim will know that we've had quite a few projects where they might not go through the video games tax relief route, but they can go down film tax relief, or they can go down animation, television instead. So it's always worth, if you're doing something that's quite new and interactive and different, come and speak to us, and we can look at which test it will fit into, and which tax relief you can apply for. As I've said, the rates of relief are all exactly the same, so it doesn't matter which one you go for, just as long as you can take advantage of the tax relief. So film, again, it's the same principle. There must be a film production company, or with high-end television, has to be a television production company. The start date that we use for film and high-end television is from the first date of principal photography. So the company has to be set up before that point. As I mentioned earlier, for film and high-end TV, the minimum expenditure is 10%, but that is only in the UK. The video games tax relief is the only one that allows EEA expenditure. For film, it has to be intended for theatrical release, and it's about demonstrating the intention rather than you have to show have a deal. But that could be that you get a release at a festival, as I've said before. Short films can qualify. With high-end television, it's about intention for broadcast, and that can be on the internet. So any of our SVOD or SVOD platforms, Amazon, Netflix, all of those qualify as a broadcasting platform. High-end television has a couple of nuanced extra categories, but that's because of the nature of what it is. So you must be spending at least £1 million per slot time hour, but that can be prorated. So if you have a film that you've got to deal with Netflix, as long as you're applying for it as high-end television from the beginning, and it's a 90-minute film, and it's over £1.5 million, that will qualify. If it is a series, it has to be at least 30 minutes per episode. And again, you have to qualify as British, which we'll touch on in a minute. And so the last two that we cover are animation television and children's television. Again, they're very similar. Production company, minimum 10% core expenditure, intended for broadcast on the internet as well. For animation, the specific criteria unique to that category is that there must be at least 51% of the core expenditure must be spent on animation activity. So if you have a mixed content production that has live action and animation, you need to be spending 51% to qualify under animation. For children's, it has to be aimed at an audience of under 15 years old. And again, they both have to qualify as British. So this is what the qualifying is British, the cultural tests. They are broadly very similar. You need to achieve 18 out of a possible 35 points. They are very broad categories we would always advise, come and talk to us. If you think you won't be able to pass, please do get in contact with us. We can talk you through it. It's not a, you know, we don't look at projects and just say, no, I'm sorry, go away because you filled it in wrong or you've just decided that it won't pass. For animation and video games, it's a 31-point test with a pass mark of 16. And as you'll see, there are all the categories are the same. In section A, it's about cultural content and it's broken down into 4 sections. And as you can see, you can pass with the full 18 points for film, high and TV and kids TV in section A, or with the 16 points for animation and video games. You can pass in the cultural content sections alone. If you're not getting all the points in section A, then you'll be able to get points in other sections as well. But the content sections looks at where the film, program or video game is set, who the lead characters are, and obviously with games you may not have characters, but we look at games in quite a broad sense. So for example, if you have a racing game and there's lots of different nationalities of the racing cars, for example, so we will sort of collate all the numbers and then break it down to how many are European, how many are non-European. And all of these sections in cultural content are about UK or European elements. In addition, the children's television, animation and video games cultural tests also have this award points for what we call undetermined settings and undetermined characters. So you get a lot of games and kids programs and animations where they may be set in space or on an unidentified planet, and you can get points for that. There's also, you get points for British or European story, or if the underlying material is by a British or European citizen or resident, and that goes across all of the 5 different cultural tests. We have got a full breakdown on our website, and I'm happy to send people copies of our leaflet so you can have a look, because this is, I haven't got the capacity to go through every single cultural test in the time that we've got here. Cultural contribution, again, it's identical in all the tests. You get points for any elements where you are demonstrating British creativity, and that could be the work that you're doing. If you're doing new and unusual innovative techniques in terms of visual effects, or how you're doing, could be R&D you're doing. You get points for British heritage. We were talking at the beginning about Monty Python, so sort of those kind of elements, if it was you're making a game or a film or a program about, you know, a significant historical time, like one of the World War II or something like that, that would demonstrate British heritage. And then lastly, there's an opportunity to get up to 2 points as well for diversity, and that's not limited to being British, and that's about on-screen diversity and off-screen diversity. So anyone in a key role that's from an underrepresented group, there'd be points available there, and that could be if you on screen as well. Cultural hubs is actually where the work is taking place, so you can get up to 4 points for film, high and TV and kids TV if you're doing 50% or 80% of any of 3 categories in the UK. For games, same principle, but you get up to 2 points. And again, you get up to 1 point for audio, music, post, and that the categories are very similar across all the tests. And then lastly, practitioners. Again, there's 8 categories. It covers for film and TV, producers, directors, script writers. The games, they are more specific to the game sector. But if you're a small game developer and you fit into more than one category and more than one role, then you get a point for every role that applies to you, even if it's just one person. And again, cultural practitioners is about UK or European citizens or residents. And even, you know, we have officially left the EU, but we are still in transition. We will not be taking out the European elements from our cultural tests because it makes it more accessible, and we want to keep all those elements in. Lastly, I'm going to
Is that even after the transition period, Anna?
Yeah, sorry, I did. Yeah, so even after transition, we'll be keeping those European elements in because we really do want to keep them. It makes it more accessible for everyone. So lastly, I'm just going to touch very loosely on co-production. This is only specific to film and television. We have 13 by the countries that are listed on the slide. Basically, co-production is where we have an official treaty. You don't have to qualify as British Uncultured Test, but you have to qualify under the co-production treaty. And it's a way of us, the UK and a partner country, joining forces to make a film or a television programme jointly, where you are sharing the risks. Both producers will be accessing sort of tax relief benefits or distribution deals, etc., in both territories. So that's the idea of that you're joining forces. So it will be recognised. If you do a UK-Canada co-production, for example, it will be recognised as British and Canadian. And again, you get a certificate that you can use to access the tax relief in each of the territories. The principles of co-production are that you are jointly making the project, and each co-producer will be bringing an amount of finance to the table, and then you will have a film or television creative spend that's broadly in proportion to that finance. Generally, for most of our bilateral treaties, the minimum contribution for finance is 20%. For Australia, it's 30%. It's just because we've had the treaty for so long, and that we just need to refine it. But so if you were doing a UK-Australia co-production, UK co-producer was putting in 35% of finance, Australians putting in 65%, and then you would share the sort of work that be taking place. Generally, you'll do principal photography in one country, and then you'll do post and music in the other, but you'll have actors and directors and crew and cast from both those countries. Although you are allowed to do some elements outside of the co-producing countries, you need to be able to justify why you need to do it outside of the co-producing countries, because the whole point is you're meant to be doing the work in that territory. But if you, for example, if you need, there's a couple of days of the script that are set in Vegas, but so you have to do a couple of days shooting there, and you can't recreate the set in UK, Australia. So we'd allow that. But what you can't do is create sets in another territory when you could do them in the UK or Australia, for example. We are also a signatory to the European Convention, so that's a multilateral treaty where you can have one or more countries that are signed to the convention that are from Europe. So we could do UK, Germany, Italy, and stress that going again, even though we've left the European Union, the European Convention is a European Commission treaty, so we will remain a signatory to the convention. There's already a couple of countries who are signatories to the convention, such as Russia and Turkey, I think is the other one, who aren't in the EU, but they are signatories to the convention. So we will remain as a signatory to the convention, so we'll carry on being able to do European co-productions with our European partners. So I think I've already touched on this already. I've gone through, basically, yeah, as I say, you need to bring finance to the table, and filmmaking, goods and services and personnel are meant to be from the co-producing countries, as I say, but that doesn't mean that you can't have EEA labour as well. So, for example, if we were doing UK, Australia, but you had a French DOP, that would be allowed. And I think that's it. So just on the how to apply, generally we have a 4 to 6 week turnaround time. We are still trying to keep to that at the moment, because it's been, you can imagine it was quite a shift going to remote working, and there's 10 of us looking after 5 sectors. We're trying to keep on top of that, and we are sort of trying to maintain the just turnover as usual. You can apply for an interim cultural test application at any time during production or development. As I say, a lot of people will do it at the early stages. Some people will need to see it for financing reasons at the early stage. But again, it's always useful if you need cash flow as you are developing or producing. It's always useful to get it at the early stage, and you can always have conversations with us you know, before you're ready to submit, or you want to check something, you're not sure about anything, we're there to help you, and that can be on phone and email. We usually go to a lot of the conferences and events, or you can see us in person. So do get in touch if you have any questions. If you're fully cash flowed, whether it's film, TV or games, you can just go for final application, but everyone has to do final once the game or film or television program is complete. With co-production, you have to apply for interim at least 4 weeks before principal photography begins, because we have to jointly approve with another country. So going back to our UK-Australia example, our equivalent in Australia, which is Screen Australia, they will get an application from the Australian co-producer, we'll get one from the UK co-producer, and then we will liaise with with Screen Australia and just check that we've got the same information and we're both satisfied it's meeting the treaty rules. We do ask for some supporting documents. As you can see, some of these things apply to film and TV, some of them will be more specific to video games. So instead of a script for a game, we would maybe ask for a game development document if you have it, or if you've got any prototypes or stills or anything. We're just looking for, when we're looking, if you're applying for points in that cultural contribution section, we're just looking for some visuals so that support what you're putting in the application. Schedules, shooting schedules. Chain of title is more for film and TV, and that's when people have got the rights to books or to make them into films, that kind of thing. You may require accountant's report if it's a final application and you need to claim points in section C and D. We would always, if you're not sure if you need to claim points, come and check with us, because if you don't need to claim the points in section C and D, if you can pass in that A and B section, as I was saying earlier, we would encourage you to just go for that. So because all of this pertains to UK legislation, you normally have to do a statutory declaration. So you normally would fill in the application online, you'd print off a statutory declaration and take it to a solicitor who isn't connected to production and just have it sworn under oath. Now, obviously, no one can do that at the moment, so we have the reason it's in red just for while we are in this COVID situation. We are accepting applications just online with the view that once the certificates have been issued, and hopefully we will all be back at work within 6 months, we will then follow up to get that statutory declaration that we should all be able to submit to us then. So I think, yeah, that's me.
Cool. Thanks a lot for that, Anna. I think you can stop sharing your screen now.
No, I couldn't see anyone. That was rather strange. I was just talking to the PowerPoint.
We saw you, and the presentation came
that was
through
very
all right.
odd.
Actually, yeah, there we go, and we're back. So if you have any questions, by all means, feel free to use them using chat or the Q&A function. And I had a couple of questions for you, actually.
Yeah.
So the first one is, what's the percentage of game companies that actually apply out of all of the game companies in the UK, off the top of your head?
Well, it's a bit tricky to know what percentage apply, without knowing how many games companies there are. I think, as I was, games tax relief has only came in 2014. Film and TV have had some sort of tax relief or government benefit for a number of years. As I said on the slides, film tax relief came in 2007, but they had a different scheme before that for a number of years, which was known as sale and leaseback. So for the games industry, although we've had it for 6 years, that's it's still relatively new for that sector. With film and TV companies, it's an automatic, they will automatically do the tax relief. We are getting more and more games companies applying. And I think there's that nervousness of form filling, and there's sort of this idea that you've got to put a red phone box in your game for it to be British. And as I was saying, this wasn't a very detailed breakdown into the cultural test, but you can get points for European elements, you can get points for undetermined elements. It's quite accessible, and you only need a certain number to pass. It's not about, I have to get as many points as possible.
Yeah. And both for you and for Tim, how long does the application usually take, either like to fill in and to actually get a response? So Anna, you said it takes 4 to 6 weeks. Tim, how long does it usually take to get your R&D tax relief application reviewed and get a decision?
I think HMRC will be working on a similar timeline to the creative relief.
Yeah.
So I think, I mean, at the minute, Anna, you probably have a better idea as to how quickly HMRC are working. We're generally seeing them work fairly quick at the minute, so they're still within like a 6 to 8 week range, and they've already committed, I think, for, at least on the R&D side, to be processing at least, well, they're trying to get through 100% of the claims as fast as possible. How's that working on the creative side, Anna?
As far as I know, I mean, obviously they're a separate unit. Once you've got the certificate, you then apply. I think, to be fair, they probably have a similar turnaround to us, but
Yeah.
with everything that's going on, we're probably and going to remote working, it's the same sort of thing. I know that if you put in a claim, and it might be they'll be looking at the costs, and there'll be one line item they might want to query, they will pay out on the rest of it, but then have a dialogue with the applicant or accountant if that's been farmed out.
Yeah.
But they'll pay out on the rest of it.
Yeah. I think the feeling is that there's probably less scrutiny at this time, purely because there's an understanding from the government and HMRC widely that, you know, people are potentially struggling and they need the tax credits more than ever. So actually it makes it quite a great time if you are looking to do a creative tax relief claim or R&D claim, because, you know, that's not to say stuff won't get looked at with a fine-tooth comb down the line, but if you are desperate for the money, I think HMRC and the government, with the BFI, of course, for Anna, are working as hard as they can to get those applications turned around as quickly as possible. And I think it's great that on the creative side, obviously there's that recognition that you can't get the certified copies at the minute. So it is just a matter for applicants who want the creative relief, just do your application, get it sent in, you know, and then speak to your certification team.
I mean, that was one of the first things. As soon as we went remotely, we realised that, you know, all the lawyers have gone remotely too, so no one can witness a stat deck. It's like, and it was like, we really were pushing DCMS from the beginning, because we had to get, as I say, it's legislation, we had to get Secretary of State sign off.
Yeah.
They were in isolation, so it's like, no, we really need you to approve this. So yeah, hopefully it'll just ease the way a bit. I mean, I've been told before that in New York it can take up to a year to get money back on film applications. So I think we are, I mean, I know it can seem like, oh, well, I've got 4 to 6 weeks to do the cultural test or co-pro form, and then I've got to wait 4 to 6 for tax reliefs. We are considered quite efficient in the wider scheme of things against other countries that have these schemes as well.
And when it comes to when exactly you should do your application, I mean, Anna, you mentioned that it should be done. It should be done after the game is completed, but you can also do it during the development of the game. I
would encourage people to apply it at the early stages, especially if you're going to get it cash flowed from the financier. They'll want to see that you've got the interim certificate, because that's the sort of guarantee for them. And I think it just helps you if you get it done early. It's only going to take you 30 minutes to an hour to fill in the form, and then we'll just have a dialogue with you. If there's any questions, it will be assigned to one of the analysts, and they'll be the person that helps you with the application. I would think it's best to do it at the interim stage. If you are fully cash flowed and you don't need to worry about making a claim until it's complete, that's fine. Just do final. But I think most people are probably going to be in that group where they need to be able to access money as they go along, or they need to get someone to loan against it in advance. Especially for indies, whether it's film, TV, or games.
Yeah, and Tim, you mentioned that you can only apply for expenses, R&D expenses, up to the past financial period, right? So have you seen companies kind of like apply once every 2 years or once every 6 months? Kind of like what's the general rule of thumb?
Yeah, so you can apply on a yearly basis. That particular, and it's the same for games, right? So or any creative relief, you can't they won't allow historic claims. I guess partly because it's harder to check the record if the records are true and accurate. But for R&D, I think a lot of companies same as the creative relief, it probably makes sense to claim as you go along. But obviously for R&D, you don't have the step of having to have to apply for the interim certificate, but you then still have to justify your spend as you go along. I think there's pros and cons to sort of like both of the schemes really. I think if you were a games company and you were weighing up between the two, generally speaking, the rate of relief for R&D is higher, but obviously, I mentioned earlier, you're claiming it from a smaller bucket of costs and expenses, really. But whereas for VGTR, it's just a much broader brush, and it's a trade-off in terms of the time and the application. I think applying for the cultural test in itself, again, is very much more straightforward in terms of getting the points rather than having to justify your cost to HMRC. Which will inevitably require a third party probably to help you do it.
Okay.
I would say that if you've completed a game within the last 2 years and you haven't claimed, you can claim as long as it's within 2 years of completion.
No, that's a really good point. If anybody else has any other questions, now would be the time to type them. If not, then I think that's about it for this evening. Generally, with as you mentioned, especially as an indie company, I think that you should totally try and apply for whatever you can get your hands on. Mainly because cash flow is going to be what makes you or breaks you at the early stages of your company. And whether you can find, as you were mentioning, some like you may not be making a full-on game that's needed for wide release, as Anna mentioned, but there might be something else that you can apply for within the parameters of another type of creative tax relief, or you might have parts of your project which qualify for R&D tax relief and that you can apply for. So I think definitely you should contact Anna and/or Tim and have a chat about your project.
And we'll be doing more. We're going to try and do more events where it might be sector specific, where we'll break down the details a lot more. This was sort of like a whistle-stop tour of all the tax reliefs. But yeah, I normally do with Tim or his colleagues just VGTR, but colleagues of mine, my team will be doing animation, the other sectors, all the events and conferences that have gone online we're offering our services online, one-to-ones and all that, or just email us directly or follow us. We're always promoting the stuff on Twitter and LinkedIn and stuff. And stay safe, everyone.
Thanks. Yeah, then that's about it. Cool. Thank you. Thank you, Anna and Tim.
Thanks
and
for
thank you,
joining
everybody,
us.
for joining us. You can keep up to date with our events on here, Twitter. And yeah, keep in touch. Bye.
Bye.
Bye.